Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for WealthPress. Today is the 21st of December. Merry Christmas to everyone. Now, before I get into today's video, if you guys have been watching me, I'm going to tell you, and I hate to say this, but I told you so. I told you so, I told you so, and I told you so again. What do I mean by that? Well, let's look at the market. The Dow's down almost 500 points right now. The Nasdaq is down 143 points. The S&P's down 63 points. It's not a pretty day. What's causing all this? Remember what I told you over the last few weeks over and over again? We have a moment where one finger is on the resurgence of the COVID-19. The other finger is on us getting back to normal. And it's a battle between the two. And we just heard news overnight, over the weekend, that England, that Europe has another strain of COVID-19. We agreed on an economic package, which I believe is already priced into the market, and we're not getting it just yet. So there's a lot of stuff to talk about, but I'm going to say this for you guys. I told you this was going to happen. I mentioned to you guys momentum levels. I showed you that the S&P 500 momentum levels are at the highest level in 11 years. I showed you how the Nasdaq short-term levels are in danger zone right now. So if this is a surprise for you, it shouldn't be. This was very much expected. Last week, unemployment data was crap. Retail sales was crap. I told you guys we're not getting a Christmas rally. Matter of fact, we're not just getting we are not just not getting a Christmas rally. We're not getting any cheer right here with the Dow down almost 500 points, which is substantial. So let's talk about global economy. And I'll show you two ways to take advantage of this. But folks, this was expected, very, very expected. If you don't believe me, look at my videos over the past few weeks. I've been telling you that this is coming. I was even showing you this last week and showing how the two are so similar. The two periods are so similar. Let me show you again so you guys understand exactly what I'm talking about. Here we go. Look at the period prior to the crash. Higher price, lower momentum levels, lower highs. Look at it right now. Higher highs, lower momentum levels. What happens? These little crashes happen here. I hate to say I told you so, but I've been talking about this over the past few weeks. Divergence and momentum levels equal exactly what we saw in March. So let's talk about global economy, and I'll try to help you take advantage of this. But I hope you guys have been in cash leading up to this or in ETFs, because you could still get out of it easier. So global shares retreated Monday. That's probably a nice way of putting it. As worsening COVID-19 outbreak overshadowed news that U.S. lawmakers finally set a deal on support for American families. Remember, I told you it's going to be either this or this, and it wasn't looking pretty. Passage by Congress of nearly $1 trillion COVID-19 economic relief package was expected later on Monday. However, a resurgence of virus outbreaks around the globe has dented optimism that the vaccine can bring a swift end to the pandemic. And that's what I've been afraid of. Most investors have already factored in expectations for fresh stimulus. But what about COVID? What are we going to do the next 3 months? Healthy people are not getting a vaccine for at least 3-4 months, and things are just getting worse right now. The gloom over the outlook has deepened as several European Union nations banned flights from the UK and other considered similar precautions aimed at preventing the new strain of the virus from gaining a strong foothold on the continent, which is already happening, folks. Combined with European border closures and UK Health Secretary using phrases such as out of control to describe the new strain, sterling is surprisingly under pressure. I'm telling you, folks, I told you guys last week it was like watching a James Bond movie. You got the madman with the rocket and the controls right here, and then you got James Bond trying to save the day. And it's about what happens first. And I told you we're getting into trouble zone because we don't have vaccines coming out for healthy people for the next quarter, which is where the big issue lies. Oh, man, I've been talking about this. I hope somebody's been listening. If you guys have been listening to what I've been saying, and if I've been keeping you out of trouble, post comments and feedback here. I've been working hard for the last 3 weeks, telling you move out of stocks, move into ETFs, start shorting low-hanging fruits. It's finally here. U.S. stimulus agreement includes temporary $300 per week supplement jobless benefit and a $600 direct stimulus payment to most Americans, along with fresh rounds of subsidies for hard-hit businesses and funding for schools. $600 is not $1,200, and again, most people are already expecting it and it's priced into the market. The final agreement was reached after a breakthrough over Federal Reserve emergency powers was resolved by the Senate's top Democratic and senior conservative Republicans. They don't have a choice, folks. We're in a bad place right now. This is like the best they can do, and even that's causing the market to cool off. That's not good. Wall Street hope is that the stimulus for the economy might help carry it through tough winter. Don't think so until the widespread rollout of the vaccine might bring relief. Folks, don't hold your breath. Go to your doctors. They'll tell you healthy people in America are not getting vaccines till April, May of next year. That's past first quarter. What are we going to do first quarter of 2020? Rely on $600 government check? I don't think so. But it'll be months before most people can get the shots. It's exactly what I've been saying. And the pandemic is likely to do even more damage in the interim. And that's why I have been bearish over the last few weeks. Really, really bearish. I've been seeing this divergence, just like we see here. I've been seeing momentum levels get crazy. Look at this. S&P 500, highest level in 11 years. It's not good. So, last week I told you, go for the low-hanging fruits. Go for short positions because they'll drop the quickest. And I think that'll happen, especially with the Dow down 500 points. I've got two more short positions for you. And again, I wouldn't be a hero and look for long sides. I would be getting out of the market or moving into ETFs, which is what I've been telling you guys to do for the last few weeks. But now it's time to get more defensive and possibly aggressive by taking short positions. Some short positions, not a little bit, or maybe hedging your portfolio. First one, Boston Scientific. What does Boston Scientific do? Let's take a look. Medical, healthcare. It's not doing well. It's down 20% this year. This company, whatever they're doing in medical, is not panning through. So look at the high. The high was made in December of last year. It's been going down. Even with the hiccup and the bounce, it's been moving down. And now it's right at the 200-day moving average. It's below the 200 moving average, and it has a reversal bar. So I would sell around the 35 level, cover it right around the 37 level, and have it break this. If it breaks this level here, the 32 level, there's a chance it can go all the way down to 25. But again, you have a nice little clear zone here. It's a downtrend. Let me go a little narrower. See that? We made two lows, and then we went higher, and now it looks like it's going to come down again. Next stock, that's BSX, Boston Scientific, medical stock. Another one is a medical stock too, Regeneron. You guys are familiar with Regeneron. It hasn't been holding up. Again, trading way below the 200 moving average. Went up last 4 days, looked like it's coming back down. Notice made an all-time high October of 2020, 2 months ago. And it's been going down. And if you look, the trend is lower. Made all-time high 720. About 5 months ago. 6 months ago. But again, if you look at this, went up, had a reversal bar, already opening lower. I'm expecting it to go down and break this low and go down further. There's a low here right around the 495 level, and you would cover it around the 510 level. Now, folks, I hate to say I told you so, but I told you this was going to happen, and it's happening just as I predicted. And the biggest clues were momentum levels, the fundamentals, obviously, divergence between the S&P and the RSI, and again, the fact that we haven't had a vaccine coming out this next quarter, January, February, March, when we really need it. And the real negative signs were the retail sales report and jobless claims last week. So I had 4 or 5 things telling me this exact thing was going to happen, and it did, just as I predicted. Again, look at my videos from last week. They'll confirm this. But folks, more importantly, I got you a couple of stocks, Regeneron, BSX, and I've got something else for you. This can help you make money, in my opinion. It really can. If you want to learn how to be more nimble in the stock market, like right now, this is a good time to be more nimble. I suggest you check out what former hedge fund insider Lance Ippolito is revealing right now. It's a trading strategy that can help you predict which stocks are ready to explode. setting you up for huge cash windfalls in as little as 24 hours. And no day trading, but nimble, 24 hours, 48 hours, couple of days, right? Who wouldn't like to pocket big gains in just a few days, especially with the market vulnerability right here? And the best part, check this out. Lance's strategy also makes it easier to reduce your risk since it allows traders to spend less time in the market. Again, the key here is not to get caught in these strong downtrends. And if you can be nimble, in, out, and again, no day trading, but nimble. A day, 24 hours, get in on Monday, out on Tuesday, in on Tuesday, out on Wednesday, or in on Monday, out on Wednesday. You know what I'm talking about. That can help you reduce risk right now, especially right now. If that's something that sounds good to you, and it sounds really good to me, be sure to check out the link below to learn how you can get in on these trades today. Again, nimble, ex-hedge fund insider, Lance Polito, stocks that are ready to explode. You've got to check this out, especially in this unpredictable market. And if I was able to help you stay out of this mess, put some feedback here. Give me some comments, feedback. I want to make sure I'm helping you out. And most importantly, have a great day and have a wonderful holiday. Bye, everyone.